You never voted for it. No election, no global meeting, no signature. And yet, every time you buy gas, order a phone, or watch a country collapse on the news, one currency quietly decides how painful that moment will be. The US dollar runs the world. Not because everyone loves America, but because opting out is worse. That's the uncomfortable truth. And right now, it matters more than it has in decades. Because for the first time in a long time, people are openly asking a dangerous question. What if the dollar stops being the center of everything? To understand why that question is so hard to answer, you have to rewind, not to Wall Street, not to Silicon Valley, but to a ruined world in 1945. Europe was rubble. Factories were gone. Gold was scattered or spent. Most countries were broke, desperate, and dependent. The United States was the opposite. It held roughly 70% of the world's gold. Its factories were intact. Its navy controlled the oceans, and it had one thing everyone else needed: stability. So the world made a deal. Every major currency would be tied to the dollar, and the dollar would be tied to gold. $35 an ounce. Simple, clean, trust-based. But here's the quiet twist. That system didn't just make the dollar important, it made it unavoidable. If you wanted to trade internationally, you needed dollars. If you wanted stability, you needed dollars. If you wanted access to global markets, you needed dollars. And over time, something subtle happened. Even after the gold link broke in 1971, the habit remained. Oil was priced in dollars. Shipping contracts were written in dollars. Debt was issued in dollars. Central banks stocked dollars, not because they loved them, but because everyone else already did. This is the part people miss. The dollar doesn't dominate because it's perfect. It dominates because it's everywhere already. Think of it like language. English isn't the global language because it's the most beautiful. It's the global language because once enough people used it, switching became painful. The same logic runs global finance. Today, about 88% of all foreign exchange trades involve the dollar. Roughly half of global trade invoices are in dollars. Over 60% of global reserves sit in dollars. That's not preference, that's inertia. Now here's where the system turns slightly absurd. The US gets to print the thing everyone else needs. Other countries must earn dollars through exports, borrowing, or trade surpluses. The US creates them by issuing debt, and the world buys that debt. Why? Because US Treasury bonds are still seen as the safest, deepest, most liquid asset on Earth. When fear spikes, money doesn't run away from the dollar, it runs toward it, even when the fear starts in the United States. That's the irony. During global crises, demand for dollars rises, which strengthens the dollar, which makes other countries' dollar-denominated debts harder to repay. So when the Federal Reserve raises interest rates, it's not just an American decision. It tightens financial conditions for governments, companies, and households across the planet. No vote, no veto, just math. And the math is uncomfortable because the world relies on a currency controlled by a single nation whose incentives are domestic, not global. The US must manage inflation at home, but its decisions can trigger recessions abroad, and that tension has been building. Countries talk about de-dollarization. They sign trade deals in local currencies. They stockpile gold. They explore alternatives. It sounds dramatic, but here's the quiet reality. Replacing the dollar isn't about announcing a new currency. It's about trust, scale, and time. You need a market big enough to absorb trillions without breaking, a legal system people believe in, a military powerful enough to protect trade routes, and a willingness to run deficits so the rest of the world can hold your money. No one wants all of that. China doesn't want open capital markets. Europe doesn't have a single fiscal authority. Crypto is volatile and tiny at global scale. So the dollar remains. not because it's loved, but because every alternative breaks faster. Which brings us to the real risk. The danger isn't that the dollar suddenly collapses. That's a movie plot. The danger is slower. A world where trust erodes just enough to raise borrowing costs, where trade fragments, where financial shocks spread faster because the old anchor feels less solid. The dollar controls the world because everyone is trapped in the same system, and changing systems is expensive. So the question isn't whether the dollar will fall tomorrow. The real question is quieter. How long can one country keep printing the world's most important money before the rest of the world decides the cost of relying on it is finally higher than the cost of leaving?